Good evening and welcome to another edition of African Americans Ain't African, the talk show that shows without a shadow of a doubt that the so-called African American didn't find his way to America trapped in the bottom of a slave ship. I'm your host, Buck Weiler, and tonight we're going to talk about credit. We're going to take a look at the credit system that we find ourselves in. I think when you look overseas at what other countries are doing and how they have their environments and their civilizations going, what is done to help the people? How are the people being made conscious of their economics? And how come in America we're not taught anything about that? Tonight we're going to have a young lady to tell us all about that. So if anything about credit, she's going to come straight with it. So any questions you have, you can call us at area code 256-849-2227. As always, I'm joined by my co-host Rick Moon. What's going on, Rick?
Ain't nothing going on. How's everybody out there doing? Hope you're doing fine, and hope you enjoy the show tonight. Going to do something a little different tonight, something that we haven't talked about, so I'm itching to get started.
Okay, before we get started, I want to share a poem with the audience, and these sentiments are what I feel about the so-called African American. The name of the poem is called African Americans Ain't African. I said it before, I'll say it again. African Americans ain't African. Now many will laugh and some will attack, but that's all they ever do. But they never bring facts. They kidnapped us, enslaved us, they beat us with whips. They do that now, fool. Show me the ships. Well, show you the ships, that was long ago, they say. I just saw the Nina Pinta in Santa Maria at a museum last May. Well, if we're not from Africa, then where are we from? On the land you stand, man. How did you get so dumb? Oh, the people you call they told your people not to read. It's 2001-4. Niggas don't read. They just watch DVDs. Miseducating all you Negroes. Books like this are just too new. You need to go back further, maybe a century or two, to a time long forgotten, your eyes covered by man. He puts his foot in your ass and skates around on your land. But you'd better wake up quick, time is not on your side, or you end up like the ancient Egyptians, victims of genocide. So it's a little poem I wrote, hope you like it. Anyway, Niecy Lashell.
Hey, how's everybody doing?
Good, good. Thank you for joining us tonight. Credit. One of the things when we see African Americans, one of the conundrums that we find ourselves in is consuming. And in consuming, whoever has the radio in the background, can you please cut that off? One of the conundrums we find ourselves in is consuming. And in that consuming, we are always borrowing. So I want to talk about credit in that aspect tonight, and some things you can tell us about the credit system that we find ourselves in, some of the trips, some of the traps and the tricks that credit, affords to the African American community. So what are you going to share with the African American audience tonight? African American ain't African audience tonight.
Well, we're going to talk about credit, the basics about it, how it affects you, how you get into trouble, few things that you can do, reevaluate your spending habits. Those are some of the basic things. These kind of things that we don't do before we find ourselves immersed in debt. So things such as a budget. So we'll talk about those things. Basic budgeting, very simple, but it can be a very powerful tool to help you. So you've got to sit down honestly and reevaluate your situation.
Okay, well, let's talk about budgeting because that's one of the things I wasn't taught in school. I think budgeting should be taught sixth or seventh grade to show since you're growing up and you're going to be a person in this system, we should be taught how the system is ran. So tell us a little bit about budgeting.
Well, budgeting soon as you say that word, people feel like they're going to be deprived. They're going to have to do something that is just so extreme. That's not the case. A good budget can really keep you from going in the hole. But it's just like a diet. When you say budget, you should think of it as being your personal financial diet. But this is a diet for life. Just like a person who loses weight has to be on they have to be on a program to keep the weight off once they have reached that goal. That you don't go back. You stay on track, and then you're going to be financially stable to that extent. So a budget is simply a guide that tells you the direction that you want to be in or where you're headed financially in your personal finance.
So instead of losing weight, we're gaining income or saving income or with the same fervor that we would go after trying to get the weight off. We should have that at least same amount of energy when we're trying to budget.
Absolutely. I actually designed a program myself and gave it a little name. I called it FIT, which is Financial Intervention Training. So when I use that analogy, that's a good one to look at.
Now, credit. How do many of us get caught up in the credit game? Explain the credit game first. What is it? And
first of all, just the basics. What is credit? That's basic. When you think about credit, credit is simply an agreement that you have with your creditors that allows you to get goods and services today, like right now, and it permits you to pay at some agreed upon future schedule. That's what credit is. It's not an extension of income. Some people use it like that. It's none of those things. And credit, above all, is not free. It's not free. Actually, when you use a credit card, and if you don't pay it off as quickly as possible, maybe not the next month, but as soon as you can, you end up paying more for a particular good or product than if you had paid cash for it.
Now, earlier you said it's not an extension of credit. You said it's not an extension of income. Explain that.
Right. Well, one of the ways that we get into trouble with credit is, and a lot of us are going through that. I've gone through it myself. You have X amount of income from your job or whatever. This can be husband and wife. And then you have your credit card. If you're falling short right before payday, using your credit card to buy groceries, to buy gas, to buy the everyday necessities or weekly necessities or what have you, that becomes, in a person's mind, an extension of money when in reality it's not. It is not an extension of your income. At some point, sooner rather than later, you will find yourself in a vicious cycle.
How can the credit system be beneficial to a person?
The credit system can be beneficial. For instance, let's say your refrigerator goes out. You have good credit. You are a credit-worthy person based on your credit scores, your credit history, and I'll go into that in just a minute, what makes up a credit score. You can go into whatever appliance store. You have your refrigerator's gone out and get a new refrigerator. You can have probably 18 months to pay it. It's best if you qualify to get, say, this nice refrigerator, $1,500, 18 months, no interest. But you had best to fit that amount into your budget, calculate how much the refrigerator is going to be, pay it off before that 18 months, because all of that interest is going to come rolling as soon as the 19th month comes. So we have to be cognizant of that. But credit can be helpful for you. You know, we get cars on credit. I mean, 3 people can go out and pay cash for a car.
Right. Interest rates. Talk about interest rates a little bit. What are interest rates? What are adjustable mortgage interest rates? What are the interest rates? And do we really understand how that is used, interest rates?
There are different kinds of interest rates, but we'll just kind of stick with the basics, and it's going to always be in the disclosure on your credit card statement. If you have a credit card that is at 21% APR, which is annual percentage rate, then that is broken down into a monthly, which is multiplied by 12. It might be 2% for each month. But in any event, Congress passed laws to make those disclosures easier to read. So that interest rate is the dollar amount that you are paying to buy now and pay later. And pay later you will, because you that's how banks and financial institutions, that's how savings and loans and what have you, that's how they make their money, from the interest that they charge you for the privilege of buying now to pay later on, be it a credit card, whether it's your home mortgage, because we all know you pay 2.5 times the value of your original principal amount for a home if you carry it to a 30-year term, or a car, any of those things, because the average car, well, we used to be able to get it for 36 months years ago when I grew up, a little after when I was in high school. Now the average car loan is about 6 years, because that's how long it's going to take you to pay it off for it to comfortably fit into your budget as far as being a basic car.
So when it's spread out like that and the payments are spread out like that, more interest is made on it, though, right?
Absolutely. What you want to do is pay extra. You want to pay extra so that you will save on the interest and the loan itself. But you have to get in the habit of it. It can't be pay extra 1 month and 3 more months later you don't pay. You have to consistently pay extra so that the loan can be paid off sooner than the committed, the contracted agreement. That way, you are saving money. You can do that with your home, but you have to pay, for a home, you'd have to pay at least one extra note per year. If you can do 2, great. So a 30-year mortgage, that might have you paying that home off for, say, 22 years, something like that. And so you will save quite a bit of money. You'll save money on anything, but you want to make sure that you're not penalized for an early payoff as well. And you did mention adjustable rate mortgages. We don't see those that much, but adjustable rate mortgages, when it comes to a home, that's definitely, it can work for some people. If you're a person who's going to be in a home for 7 years or less, and you're going to sell your home or lease it out or something like that, and you're gone from that home before that adjustable rate mortgage expires, that could work for you. But the average person, no. Most people are going to be in their home for a duration of time beyond a short period of time, and the adjustable rate mortgage will go up. So it's a temporary mortgage that has a rate that's going to increase at the designated period in time. So if it's set in an adjustable rate mortgage, which is an ARM, that's what the acronym is. If it's set for 5 years, then you read the print, make sure you understand it. If it says it's going to go up to 9, or if it's going to go up to 10 and you got it at 5, then that's what it's going to be.
Speaking of interest rates, there are loan places everywhere. Payday loan, get your check cash, get a biscuit. They got loan places everywhere. They got more loan places here than they have fast food joints. How are these places helpful to the community?
They're not. But I'll say this. I say that, but I qualify it in the same breath. And I hate to have to qualify it, but we deal in reality. And I know African Americans ain't Africans. That's what you want, because we're dealing with our people. Most people, a vast majority of our people, we can't go into the bank and get a signature loan. You might need $3,000 or $4,000 for some work on your house or something like that. Or you might need $500 because you need a new set of tires and you can't see your way clear. You don't have it on your credit card because you don't have enough of a limit on your credit card to go buy a credit card. So for that person, $500 or 2 payday loans, sad to say, that could work in that instance. But again, you still have acquired debt, you've acquired another bill, and you have one that you really don't have that much time to pay off because these payday loans, they are at an average of 500 and 600% interest rate, based on the fact that you get them for 30 days.
I think if it was 800 or 900% interest rate, I don't really care about that. What I'm seeing the problem is that our insatiable appetite for other people's products is what's driving this craziness.
I'd agree with that.
Because it's like you're saying, our consumer habits. We just have to have everything, and I think it's a vicious trap, and it's just sad to watch so many of us get caught into this situation, and it's like a hamster on a wheel, just continuously running. Earlier you talked about a snare. You talked about hanging yourself with credit, getting caught in a snare. Could you talk about that?
Well, it goes to what you just said. When we extend ourselves beyond our ability to repay the amounts that we have borrowed, say on credit cards, mostly credit cards, which is called unsecured debt. This is what credit cards are. So secured debt is simply a debt that has collateral attached to it that they can take away, which is a home or a car, those types of things. But when we extend ourselves beyond our income, that is an easy thing to do. People may not think that it isn't. Okay, how are you having more outgo than you have coming in? Easy, because if you're making it, quote unquote, and that's what we call it. Someone's lending you an extra $100 here, family member or whatever, and this is becoming a regular thing, or you're getting it from somewhere. So instead of you having $2,500 of your income, and most of it is going to bills, you're now having to go out and get extra money because you are solidly in the red. You're in a snare, and the debt is choking you.
How much does credit factor in the consuming habits of the African American?
Credit factors in quite a bit. I used to be a subprime lender. I am a housing counselor. So quite often I see people's debt-to-income ratio, which is simply the amount of debt that you have when you divide it into your income. I see people's debt-to-income ratio over 50%. That is a dangerous zone. Actually, you're walking on a landmine is what you're doing. So, you really want to keep your debt-to-income ratio at 36%. It's not impossible to do, but once you get into the zone of your debt-to-income ratio being 50% or more, you've got some drastic things that you have to do. It's almost like needing to have an emergency surgery. You've got to hurry up and do some things differently.
Area code 256-849-2227, African Americans Ain't African Radio on Black Talk Media Network. You can also find us at AfricanAmericans.org. Go over, take a look at some of the pictures and some of the history of the Americans. That's the name, y'all. Americans. Rich soul people. So do a little research on the term Americans. You'll find that you are why everybody is coming over here to take your stuff. We can also be reached in Facebook, African Americans Ain't African. Check out the chat room that we're in. We try to bring information that's useful to the youth every day. We are not Africans. We're not Africans. Rick. You there, Rick?
Yes.
What's in your wallet?
I'm here.
What's in your wallet?
Not too many credit cards or nothing like that.
Did you have any questions for Niecy?
Yeah, I have a couple. One simple question. If if I came to see you, what do you exactly do? Do you prepare budgets, or you give advice, or what do you do?
I do those things. That's exactly what I do. When I see a client, the first consultation, we sit down, we discuss. I ask them to bring a credit report. You can get those at annualcreditreport.com, all three of the credit reports from Experian, TransUnion, and Equifax. So I ask them to bring those, and we'll review them. In the process, I do a couple of things. I go over the credit report. It depends on what the person is there for. Some people come to me because they are wanting to get their debt in line to buy a home. So you have those people. Then I have people who are in serious indebtedness, and they want to have me work with them through a debt negotiation process with creditors and bad debt, trying to get those payoffs, and we schedule them and prioritize those debts so that they can do that. Then I also teach financial literacy. So you'll have people who have never really had credit, or younger individuals come in, and I provide workshops, group workshops, and so we go over all the basics about credit. But in the end, what all of this is about is personal financial literacy. That's what it is.
Right. Also, so how these credit companies, the ones that you do the credit checks with, how much of a factor are they really in getting you, say if I wanted a home, get a loan for a home or something, how much do they really play? Because I hear different things, about that.
About the credit scores and
about the credit bureau that you do credit checks on, and all this point system, and I really don't understand too much of it because I really don't deal with credit that much. But I was wondering how much of a factor that stuff really has on people getting things.
It has a big impact on your ability to get things, in particular a house. If your credit score is not at a certain point, if you do not look like you will have the ability to pay back a loan, and let's be clear, for most people, a home is the biggest investment that they will ever make in their life. So we're talking, I'm in the South, we're talking about Seeking Home, where I live in Tennessee, $150,000, $175,000. That's a pretty nice house. That's going to be a person's biggest debt, and that's what it is until you pay it off. Now, you are not going to get a house without looking the part in terms of your credit worthiness. And when we talk about credit, the banks or mortgage companies, they're going to look at your ability to repay that loan back. They're going to look at how you paid your bills, what bills you have, and so the things that make up your profile, so to speak, when a bank or mortgage company or one of those is looking at you is your character, how much credit you have, your credit worthiness, your capacity to repay. These are the 3 C's of credit, and collateral, okay, which is, that belongs to how much debt what you're going to get in terms of for the debt. If you're going to get a car, they're going to be looking at what that particular thing is, which is collateral, for the debt that you're going to acquire. So that's what collateral is. So they look at those things. And, I can't crystallize it in any better other than to say, yes, they look at credit. If you don't have any credit, typically you're going to need a co-signer, someone strong enough to allow you to kind of ride their coattails. And then after that, you should be strong enough at the point, to get things on your own.
Okay, because I look at credit as, they're trying to keep me in debt, and then that's basically what it is for me. And I tried it before, and I hurried up and got out of it because I saw what it was doing to me. And so I went ahead and got out of it. So, but yeah.
So Rick, what do you think about in countries like Libya? and in a lot of countries they don't use interest. Interest rate doesn't factor into their economic system. Do you think that was something that is a good idea over in those countries, and could that be done over here, or what do you think about that?
Hey, I think anything can be done over here. You know, as a matter of fact, I think credit could be eliminated, period. All it takes is, well, it's going to be kind of tough because it's going to take for some devils to have a sudden change of heart. But it can be done right now, if you ask me.
Well, you see countries like the BRIC nations, Brazil, Russia, India, and China, they're starting to pull away from the dollar and not use the dollar no more, mainly because of what you said, a lot of interest payments and a lot of red tape when using the American dollar. And as a block of people, African Americans, I mean, seriously, with the spending habits that we have to all these other nations, I mean, if we were there thinking like that, I mean, an alternative to the current situation, because the current, I have to be with Rick, ma'am, is that it has everybody on that treadmill. You know, you're wearing stuff that you wearing stuff that you haven't even paid for. And I think with African Americans, the whole group African American, that helps us keep up our facade. Here's a question. Let's say when you say you buy a house, we don't really buy a house. We're really just leasing it. We're just really on a 30-year lease from the bank, if that's what it is. But when we say we buying a house, it give us, we have this fake, it's not real, whatever it is. It's like a badge or a mask that we're wearing when we know we're not buying the house. So I think the financial situation and the financial system that we're in keeps us like that as a group of people. I'm sure there's all kind of other economic systems, but since the African American does so poorly in this one, especially with the economy going through what it's going through now, because you have nations of people over here and they're bringing their own workers now. So that's gonna have a tremendous impact on the African American communities. As a group of people, are we coming up with alternatives for that? So
I agree with you. I couldn't agree more. What I basically do is, now let me be clear, I'm not an advocate of credit. I help people to understand it because it is, quote unquote, a necessary evil. That's the best way I can tell you. It is a pillar within our American capitalistic society, our economy. That's just the way it is. And over the past 50 or so years, as things have cost more, basic things, then it has just become a mainstay. But it's a mirage. It's almost smoke and mirrors. It's all of those things. Now, frankly, perhaps at some point we may even go back to the barter system. I don't know.
Yeah. Talk about some of the misuses of credit. Did we talk about that? Talk about some of the misuses of credit. Where are some of the biggest forms that the group is failing?
Well, when we talk about how credit is misused, we're usually talking about spending habits, things that lead to debt overload. For instance, spending more money than you make, that's just basic. We talked about that. And people know this. It's not like they don't know. What people tend to do is just put those things in the farthest corner of their mind. They try to deal with their financial situation as best they can. I see it in my family. Been there, done that myself, and that's how it is. You're spending money that you don't have, then what you're doing is setting yourself up for this cycle that we talked about. Another thing is using credit for ordinary purchases. Don't do that. You should not use credit for groceries. Shouldn't use it for gas. Heaven knows we know people use it for clothes. Shouldn't use it for clothes. You shouldn't use it for entertainment. you should only use credit when it's absolutely necessary. Okay? Because what gets in your mind, a lot of people's mind, I've done it many years ago. I had to unlearn a lot of bad behaviors myself, so I speak from experience. When you get into the mindset of buy now, pay later, then it gets harder and harder to pay it back later. That's, so that's what people go through. You go, you get these things, buying clothes, buying groceries, buying gas, all of these basic things. Then if you don't have the money to do them and there's something that are necessary, they just should not be put on a credit card. Using credit when you have the cash. There are many times that people will reach for their credit card and have the cash and simply won't use it. Using debt to pay off debt. Taking a credit card, transferring it to a different balanced credit card, thinking that's promoted by the credit industry itself, thinking that's going to save you, but most of the time those are temporary teaser rates. So all of these things, are misuses and abuses of credit that people don't really think about.
Job losses. We talked earlier about how, we're having a slowdown in the credit, and I think everybody is feeling a pinch. Job losses. What are some of the havoc that job losses have, can create with people who are locked into the credit system?
A job loss is going to send you over the cliff, plain and simple. Because what we find is, and this is statistical data out there to prove that, what we're finding is that it's taking people longer than 3 months, taking people a little bit longer, some people a little bit longer than 6 months. Doesn't have anything to do with whether or not they have a degree. I know people with double degrees that are working jobs that have them underemployed. So this job market that we're in, it is rather unprecedented, and it's taking people longer to secure even close to what they were making. Keep in mind, some people don't find employment comparable to what they had. So you are then in a situation where your only alternative, if you have a lot of debt, may be to file some form of bankruptcy.
Now, I've heard of bankruptcies, and and one of the things in this because we're living in an artificial system. I think the system we live in it's like trying to get a squirrel or a bat to live in this type of system, and I think we just adapted to it. That's why I say there has to be alternatives, and I think the group should be coming up with ways to find those. When we're in school, we're never taught about credit. We're going into this system and we're just never taught anything about budgeting, like you said earlier, interest rates. For a lot of us people coming out of high school, because of course not many people go on to college. The majority of people, we don't learn that. So if the people go to high school, up to high school, and they don't go to any college, they have very little training in finance. What can be done to curb that loss right there? I mean,
Personally, I feel that if we took children as early as, say, 3rd or 4th grade and started teaching them about the importance of saving. But we don't do that because we are in an instantaneous society. You want it now, you can get it now, not a problem. But the ramifications of that is it's going to cost you. So that's where we are. People have to, I think what we should do is have community collectives. I'm looking at hopefully trying to do something like that, where you take kids who are at an age where you can break things down to them basically, invite their parents. You want their parents there, and make this a family thing. And you've got to learn you've got to learn the basics about the terminology, what this stuff means. what it can do, how it can affect you, and you can come up with ways of talking about credit, debt, budgeting, all of those things, so that our children can be enabled and empowered with these kind of tools at an early age. That's the only way. And as a group, our people, we are just so accustomed to making do. And what I believe, this is my own belief, so in my opinion, is that we feel so deprived, we work so hard, we don't care, we're going to get something, whatever it is that we want, even if it pushes us over the edge, because we deserve it. That's basically what people go through.
So the desire to consume is just basically because we deserve it. What we consume, those appetites are controlled and driven by other people. Is that a driving factor in this credit scam?
Of course it is.
Because
Absolutely.
because what I notice, what the African American wants, here's an example. After the civil rights movement, one of the problems in the civil rights movement and being down here in the South, they always talk about, well, you couldn't go to a restaurant and eat. I hear people talk about when they was going somewhere, they had to take them and their girl had to go around to the back door and get served out of the back door. And this is what I mean about education, well, not just finances, but everything. That we didn't take that opportunity to take on the food industry and create our own food industry, kind of like the Chinese has done. That says a lot to how we think. And all of our appetites and all our desires are controlled by other people, like the Chinese. You said earlier that everything we do is based on our desire for materialism, getting stuff, and the craving for assimilation that has us literally becoming white people. Can you talk about that? Because it's like the stuff that we covet is not the stuff that we need.
Absolutely. I agree.
So could you talk about that, how we just we'll buy something just to say I have it. Sometimes I do this. I'll go to a mall and just watch people walk around the mall and watch them when they go in a store and when they come out. And I also watch the merchants that we go give our money to. And most of the stuff that we come out the store with is garbage. So how are our desires and our appetites to buy this junk? Who controls that, and how are we so easily duped?
The media controls that. The media, we know almost everything that most people, our people in particular, but people in general, they are controlled by the media. Now, the way the media drives us, it's all around us. You have to really be cognizant and conscious to make an effort to not allow this stuff to infiltrate and filter into your mind. That takes discipline. It takes being aware. So if you have a nice home and you live in an urban area, but the area is pretty decent, but you feel you make enough money, and I'm saying you in general, not you or me or anybody in particular. And this is the mindset. I talk to people all the time, so it's not like I'm pulling this out of a hat somewhere. They're going to go and get an upscale house in the suburbs because they feel that is where they have arrived. I tell people all the time, life is a journey. It's not a destination. And see, that's where we make our basic main mistake is thinking that life is a destination. It's a journey. Because we don't know what's waiting around the bend for us. If your home is comfortable and you're close to paying Chase Bank or whatever bank that amount that they have that you are indebted to, so I'm trying to be specific about it, on that piece of paper, even though technically it's never yours, because as long as you live in that dwelling, you have to pay property taxes, and it's the land, because your house can get bulldozed over, and as if it wasn't even there. So we get into those kind of nuances, but they're real, and not just technicalities, it's real. But this is the mindset that people have. Your car is paid off. It's the car that's 8 years old. You want a new one. Nothing wrong with the car that you have. You know, that's what that's our mindset. We feel that this gives us status. We're always looking for status. I don't know why, because that's really not me, but people that I know, people that I meet, that's the driver. And it does come from the influences of the media, because the media is all around you. It's like a bee buzzing in your ear.
Yes, I often have dreams of the people who call themselves African Americans waking up and come up with the idea of building cars that run on solar power, that can hover above ground, you know, that we tap into who we really are, connect ourselves back to the land, and start using our genius for the benefit of each other and not for the benefit of everybody else. Maybe it's just wishful thinking, I don't know, but it seems that the environment that we try to survive in, it's breaking us down. It's breaking us down because we don't really have time to enjoy life, because we're paying the interest rates, we're paying the principal, we're paying the fees, we're paying the late fees. It's just all kind of stuff. So I'm seeing where all that really takes it gnaws at a person, especially when they do it their whole life.
I agree.
So earlier you were talking about bartering. Now, what about some of these things that are coming up now? Bitcoins. I posted something today where, you know, money is really getting taken out. They're going to these bracelets now. Have you seen that piece where you have a bracelet and they just scan the bracelet and it takes the money out of your account? That's starting. You can go to African Americans Ain't African in Facebook, and we have that posted up in there where that you just wave your bracelet. They just scan your bracelet to take your money out. So in this system that we're in, the way it changes, and we have no say-so in the way it changes, we just go along with the flow. If they said we're going to put your phone, we would go to that. If they say we can do it off your tennis shoe, we would go with that. In this system that we live in, whatever's controlling the system, whoever controlling it, we just jump like, you know, whenever they say go. What can that lead us to in the future?
Right now, I'm with you. I hadn't seen the bracelet, but I can, and I'll have to check out your site. I can fully believe that everything that comes into being, it's already there. So we think these things are new. They don't just come out of osmosis, or they were just now developed. You know, you don't bring anything to market without it already having been there. So that's first thing. As far as the Bitcoin, that's kind of new, relatively speaking, over here in America. But I'm looking at it, and it's really something. Basically, what I see is that, you know, the fake fiat, and that's just another nuanced term for the system, it doesn't have any value.
Well, here, go ahead. I'm sorry.
I was just going to say, it is given value. Just like it's given value, value is taken away. Because what people don't realize, the same $10 an hour, and that's, you know, that's what we're trying to get minimum wage up to. So I'm going to say that same $10 an hour now buys far less than it did, say, 15 or 20 years ago. It doesn't hardly buy anything. You can't take $10, or barely can, go buy a dozen eggs, a gallon of milk, some bread. I don't think you can buy orange juice with it, okay? You probably have to pick 3 of those things out of the 4 that I just said, and that's for a basic breakfast. Now,
Wow.
it just doesn't have any value. They assign the value. It is now X amount today. Oh, okay. All you need to do is look at your gas. We don't have a gas shortage. I mean, and what behooves me, and I look at people, and I just try to keep my thoughts to myself, Oh, gas is going down. Really? Okay. It's a yo-yo. It really shouldn't even cost what it costs. But we think that it's going down because it's now 10 cents less than it was last week. And they're just playing yo-yo with the gas, and there is, in essence, no gas shortage. Things like that.
Barclay launches payment wristband. Cash too expensive to handle. Wow. Barclays has developed a wristband that would allow wearers to pay for a morning coffee as well as their daily commute. Wearers swipe the bands, which can be worn 24 hours a day, over a terminal at a shop or pay point on the bus or station platform to make a purchase. The B-Pay bands are part of a wider revolution in wearable technology which will allow people to negotiate daily life without using cash. This last piece. All the major tech giants such as Apple and Samsung had developed or are working on smart watches which will have a range of functions from monitoring heart rate to giving directions. So where are we going? Where are we going with this? Now, if you talk to the Christians, they like to say they like to talk about the mark of the beast.
Right.
Where you can be controlled from your wrist. The credit system. How does this scenario play into the credit system?
Like we just said, in our conversation and discussion, it's artificial because it's not money. Money is not assigned to anything. We have not been on a gold standard in a long, long time, so the money really isn't backed by anything. And the goods and services that we pay for are simply, in my opinion, because when you sit back and think about these things, when people are having to work 2 jobs so that they can have, in their mind, what they feel is a comfortable, quote-unquote, and I say that with quotations, quote-unquote, comfortable status of living, you can't be paying attention to what's going on around you. When can you? You're working 2 jobs or you're working a job with a lot of overtime. Either way, you're working a lot more just to get really less when you consider what things used to cost or what they really should be costing, because everything that we buy now is made to be disposable. So it's not even really made out of anything. Houses are not made like they used to be. Cars aren't made out of material that they used to be. Nothing is sustainable because it wants you to stay in what's called planned obsolescence. Planned obsolescence simply means you buy this, it has X amount of shelf life, whether it's your washing machine, your stove, your car, or whatever, and it doesn't work anymore almost as soon as you're through paying for it, or just when you feel that you're comfortable and you no longer have that particular debt again. So that's part of a cycle that's called planned obsolescence.
Could you say? Excuse me. Could you say that again? I didn't. Plan is called what?
Planned, and it's a real term. Planned obsolescence. Like the root word is obsolete. Planned obsolescence.
Wow.
Planned obsolescence. Yes, sir. Wow. But that's what we're all into, because how can, think about this, and I talk to my children about this, how can we have a society of people, and I'm just going to concentrate on where we are, who we are as Americans. Technology is off the chain and all that. People are supposed to be so much smarter, but yet we have crap. We have things that don't last. How can that be anything other than planned obsolescence? When, say, 30 years ago, a car would last you and become an antique and it's still drivable. And those people didn't have the education, the technology, they didn't have any of that the people have now. How could that be?
Planned obsolescence.
Exactly.
Could you give the definition of that one more time?
We are in a system of planned obsolescence where the things that we buy have a shelf life of X amount of time. Whether it's your computer, for instance, I'll use my computer. I had to buy a laptop, and this is important because it happens all the time. You buy your laptop. My laptop was 3 years old, running perfectly fine. I'm a busy person. I use my laptop. I'm a professional. Out of nowhere, my laptop gets a virus. Couldn't get rid of the virus, and it just died. Now, in my mind, and I'm not a conspiracy theorist. I don't even use that word. Okay, so here I go. I have to go out and spend $700 for a new laptop. I didn't need a new laptop. Let our government say, oh, we can't control any of that hacking and all of that. Yeah, well, I'm sure they can't, because when something gets into your computer and all of that, and people use their genius for good or not, however they choose, then there you go. You got to pump money back into the economy. This is how people get trapped with credit cards. Maybe you don't have $700 for a new laptop. I happen to buy mine cash. But then if your kids really need that, you have children, you need the computer or whatever, and you got to go and get one because they have to do their homework, schoolwork, and whatnot. You have to do your work. So you go out, buy another computer. Who's to say that these things aren't happening on purpose? That is one of the best examples of playing obsolescence.
Wow.
How about your washing machine? I have an old washing machine. My washing machine is 7 years old. I practice what I preach. I don't mind saying it. Might be a little shameful, but not for me. My washing machine and dryer don't match. I don't care, because the new washing machines that they have cause you to buy washing detergent, a certain powder that's about $20, $25. If you don't buy that particular powder, then your washing machine won't work. The warranty won't work on it, okay? And they have microchips in them. And you have to almost buy a service plan for these appliances, because after a year or so, they won't work. And the only people who are really qualified to fix them is an extended warranty, because the warranty usually only lasts a year. So you have to pay maybe $150 or $200 for an extended warranty. So that keeps it going. So that's extra money coming out of your budget through planned obsolescence money.
Wow, we have a few callers on the line. Any callers have any questions they want to bring to Miss Lashell? Niecy, in closing, can you give us some ways? Can you tell us the difference between the Chapter 7 and the Chapter 13 bankruptcy?
Sure. I want to just, make it pretty simple. A Chapter 13 is what's called a wage earner, okay? That's when the person who is in debt, all of these are under the U.S. code of U.S. bankruptcy code, because it's a whole separate code itself, and it falls under the U.S. government. And states have different little nuances, but basically these things are federal statutes. So the Chapter 13 is a wage earner, where the debtor files a petition with the bankruptcy court. They collect their information, their financial information, tax information, a list of their creditors and outstanding debt. Usually you're going to be mandated to get credit counseling. You also have to pass a means test, usually. And, you go through the procedure, and once you do all of that, you are entered into a repayment plan of sorts that lasts from anywhere from 3 years minimum to 5 years. And, your debts get paid. They come out of your check before you get paid. So what's left over is $200, and I've seen it, and it's egregious, but I've seen it. It's $200. It's left out of your check, and you get paid $1,500 every biweekly. Then that's all you get, because your creditors are going to get paid. And mind you, there are some instances where smaller debtors don't get paid, but they're still out there, so you may end up having to pay them after the Chapter 13, but you should have your attorney to work all that out, so that once you're through with this nightmare, you're done. So that's a Chapter 13. Now, a Chapter 7 is basically where debts, and this is for individuals as well as sole proprietors, companies, small companies, and things like that, where they file and petition in the same way. You usually have to meet a means test. You generally will have to give back a home security debt, like a home or a car, because most of the time, and I'm not saying this is absolute, but generally, unless they allow you to reaffirm that debt and bring it to arrears, because you have gotten behind, and otherwise you wouldn't be seeking this type of, assistance. You would not be seeking it. Then, they may want you to go ahead and try to put the house on the market to sell it or whatever. So you have an attorney to work these things out. And once you're going to go back and forth to court with a Chapter 7, it usually takes about 7 to 8 months before it's finalized. It stays on your credit report, meaning that both of these things become part of your credit profile, and Chapter 7 stays on there for 10 years. Now, the thing about a Chapter 7, believe it or not, when it is for people, because both work in different ways, and so usually a bankruptcy attorney can decide, along with your help, because it's your debt, which is best for you based on which direction you're trying to go. But you can reestablish credit if that's a goal, because it may be. I went through one myself in 2001, September. In 2004, I bought my house. I started reestablishing my own credit, because same things I talk to people about, I've used them myself. I don't give people advice that I wouldn't use myself. A year after that, I bought a brand new car, and that was in August. Wasn't even quite a year. That was in August of 2002. So when you understand this system, because that's what it is, it's a construct. Let's be clear, perfectly clear. It's a construct. But when you understand it, the best you can do is make it work for you, not get caught up in it, not get choked to death in it, maneuver through it as best you can. That's the best advice that I always give my clients.
Well, Miss Lashell, I want to thank you for sharing with the African American Ain't African crowd. Rick, did you have anything you wanted to ask or, let be known before we are? And we're going to have Miss Lashell come on once a month to talk about financial matters, because I think this is something that we all need to know. Like she was saying, budgeting. Maybe we ought to just have her come on one day just to talk about budgeting, because these things that the youngsters are going to need to know coming up in this new economy that we're now entering. And I think we're going to be the ones who have to put the information out so it'll at least be out there. So, Rick, did you have something you want to add?
Yeah. I just wanted to ask one question about, because she was saying earlier about taxes. And, paying taxes on, like, your property and stuff like that. And I've always been amazed, like, why do I have to pay taxes on something that I own? And I was just wanting to ask her, do you deal with mortgages, too?
Yes, I help people with mortgages. I don't do mortgages. Now, I have done mortgages. That's another chapter of my professional career, because I used to be a mortgage broker. But I help guide people. People come to me before they buy a house for credit counseling and pre-home buying information. So the reason we have property taxes is that's part of the construct too. You never stop paying property taxes. So in essence, a home can be sold for property taxes that are in arrears. We know this. So because your mortgage is paid off and you have the deed, quote unquote, the trust to your home, that does not mean that you cease and desist paying taxes. Because if you don't, usually they will allow you about 2 years. After that point, your home can go up for sale for unpaid property taxes, and that's pretty much everywhere in America. And you know why? Because property taxes go for schools. So they say go for schools, pay for police, firemen, teachers, all that stuff. So build roads and bridges. That's what your property taxes go for.
I also one more question. I have one more question. What's a tenant?
What's a tenant?
Yeah, on mortgages. And, I see tenant on there, and if you're buying a house, I want to know, wouldn't it say owner instead of tenant?
I haven't seen tenant on mortgage paperwork, but if, different mortgages have different things, and you do well to read all the fine print. But if you are a tenant, essentially you are a tenant because you don't own the home outright. And most people will get a 30-year term. Some people, if you're financially secure and okay, I would recommend getting a 15-year mortgage. Pay it off as soon as you can. Here's why. The sooner you pay off a big debt like a mortgage or a car, that frees up money that you no longer have to pay monthly. You can do a lot of things with that money. That's called opportunity cost. The opportunity cost of your money is paying debt or freeing it up and saving it for something else that you like to do with it. Like put it into a business, put it into a savings, whatever you want to do with it, other than allocating it to debt.
Well, Ms. Lashell, I want to thank you for joining us tonight and giving us some information on credit. Your information was I dug it. I thought it was wonderful. I think just something in credit is something that we should be taught about second, third grade at least. So if the audience members want to catch you and call you, email you, ask questions, or how do they contact you?
I can be contacted by email. Email is the number 4 advantageconcept@gmail.com. So that's one of the best ways to reach me. If they want to call me, they can. My phone number is area code 901-210-4017.
Well, Ms. Lashell, thank you very much for you stopping by with us and sharing with us today. And I'd like to have you back real soon because, like I said earlier, I think that finance thing is something that we have to get a hold of.
Oh, I'd love to. Thank you for having me. I appreciate it. Look forward to working with you.
And to the audience, this has been another episode of African Americans Ain't African. Please send your family, your friends to the website. We're on Facebook. Let's talk about it. If you are African, if you came over here on a slave ship, let us know the name of the slave ship. Let us know the name of the place where you came from. Let us know that. But I will always stand by my word that African Americans, we ain't no Africans. Until next Tuesday.
No, we ain't.
No, we ain't. No, we ain't.
Okay, well, great. Well, thank you guys. Hey, we'll see you guys next week. Everybody have a good weekend. Summer's about around the corner, so if you're down here in the southeast, get ready to start dressing cool and enjoy it. And we'll see you next week. Peace out.
Good night.